Hello and welcome to this short due diligence interview with Hambro Partners. My name is Chris Curtis, Community Development Manager at Asset Risk Consultants, or ARC. If you're not aware of ARC, we're a specialist investment consultancy founded on the deep understanding of the drivers of persistent investment performance. We also produce the ARC indices, which are a collection of 350,000 actual private client portfolios managed by 120 investment managers, of which Hambro Partners are one. Today, the purpose is to run through a few questions that we ask investment managers as part of our due diligence process. So I'm delighted to be joined by Robert and Billy from Hambro.
Hi, I'm Robert Seifert, Portfolio Manager and Joint Head of the Professional Advisor Services.
Hello, I'm Billy Hughes, Portfolio Manager and other Joint Head of the Professional Advisor Services.
Thank you. So let's kick off. So what makes you different?
I don't think at Hambro Partners we actively try to be different. We are very clear and transparent in everything we do. We are proud of our outperformance, and we have a 30-strong investment team that's focused on building portfolios that's centred around direct equities. But I think although we have built a strong track record, it's the service which is critically important. We are structured to deliver on that best-in-class service. So whether that's being independent, we're 88% owned by working employees, whether it's working with a limited number of advisor firms, which is fairly unique within our industry, whether it's the culture. We have a very strong focus on ensuring client outcomes, and only 2 portfolio managers have left the firm since our inception 13 years ago, both retired. And I think combining that with investing in direct equities on a global basis, it's a very powerful message to give advisors and their clients.
So if you had to hang your hat on one particular thing, so what are you really good at, what would that be?
I think it's the investment due diligence that goes into constructing portfolios, but then wrapping that in a service that we can disseminate to our advisors and to our clients so that they understand what we're doing.
Okay. I mean, performance, you're very proud of your track record. Performance is a very easy thing to measure. How do you measure service?
We obtain a lot of our new business through word of mouth, so we feel like we are doing something meaningful and beneficial there. We also send out surveys to our advisors to hear back on how we are performing, where we are good, where we're not so good, where we need to add resource. And we have constant dialogue with the people that we work with, and that feedback comes through that. So it's through a lot of different sources as to how we measure that service, and it's important that we get it right.
So how do you secure consistency across the client book they're getting the Hambro experience?
Yeah, that's a good question. So from an investment standpoint, we have a centralised investment process. So that spans our Harrier fund range, our Harrier MPS range, and our bespoke portfolios. Ultimately, the idea is to get all of our best ideas into every single client portfolio, so to ensure the consistency of the investment output across every single client accessing us. That's the idea. And that chimes in with the launch of our new Harrier Model Portfolio Service, or our MPS. Which we are very excited about. It constitutes 3 asset class funds, so a global equities fund, a diversified strategies fund, and a fixed income fund. And what it does for our model portfolio service is get us closer to our bespoke offering, whereas before we were investing in a fund of fund MPS. Now we are using the asset class funds to get us closer to where we want to be. So in terms of where we feel like we add value and where we want to get to, it's consistency of investment process, consistency of the performance that we are providing, consistency of service, and also helped by the consistency of the team. And I think that is quite a strong message.
So you mentioned the whole team works together on idea generation. Where do you get your ideas from?
A number of different sources, Chris. So that's both internal and external. So it's up to portfolio managers individually to go out there, especially if we're trying to pick the best 30 or 40 individual company names to populate client portfolios with, but clearly our buy list is a bit more extensive than that. So it could be up to sort of portfolio manager idea generation. So if the portfolio manager comes up with an idea, they then take ownership of that idea, present it to the investment committee. They create what's called a smell test, which is a sort of shorter form due diligence document. That's then presented to the investment committee. That's the whole 30 investment strong team. And then if it's felt that there is merit to take that further and do more work on that, the portfolio manager then goes away and creates a fuller due diligence document, which they then present again to the investment committee for discussion. So that's one aspect. We also use external research as well. That's using analysts and other third-party providers, investment bank research. And then we also use a quant analyst tool via a system called Holt, which is owned by Credit Suisse. And that's more where you look at the quants and the financial numbers to make sure that particular investment idea stacks up from a financial metric point of view as well.
Okay, and how does an idea get into a portfolio? Does everybody have to agree, or is it a majority decision? How does that work?
Yeah, that's quite a good question. So a majority decision based on the investment committee. So clearly when you've got 30 portfolio managers all around a table, you're not necessarily going to agree on everything, but a general consensus view as to whether a particular investment will go on our buy list or come off, looking at conversely that way as well, it is done by a consensus view.
This is a question on motivation. How do you get remunerated?
As a portfolio manager, there's a number of different metrics that are looked at throughout the year in a sort of appraisal time as well. But what I say the key focus for us is still client service and client outcome. So a big part of the appraisal process is looking at, what have client service outcomes been over a particular period. As portfolio managers, we're not remunerated on bringing in assets or having targets. And I think that's quite important, by having targets like that, from our perspective, creates the wrong behaviours.
I think it's important to note at that stage that any investable assets that portfolio managers have are invested in the same way as underlying clients. And as a partnership where 88% of employees, 88% is owned by working employees, there is definite alignment to the underlying clients reaching their financial objectives.
So you mentioned the Harrier MPS. How is that different to the existing offering?
The problem is that the platforms have an inability to custody direct equities and direct bonds. So there's high cost of trading, and some platforms can't hold international equities or bonds. So in order to circumvent that, we launched 3 asset classes, the Global Equities, Fixed Interest and Diversified Strategies Fund, which will house all of our best ideas, making the portfolio look very similar to a bespoke portfolio. And that will then allow our existing MPS holders to get the best of James Hambro and Partners in these specialised vehicles that will be available on platform. The MPS will be run in a similar way, but we will just be investing in the James Hambro Harrier MPS range rather than existing fund-of-fund approach.
So basically, you're investing in 3 funds now in an MPS solution, but they're your funds. So you're removing that layer of third-party exposures. Cost-wise, is that an extra layer of cost?
One would think it's an extra layer of cost, but actually it works to remove the costs. So it removes the costs in the third-party funds that we were using in our existing MPS. And also, we are not charging a management fee at the fund level. We are only taking our management fee at the platform level. So actually, on balance, the new Harrier MPS becomes a lot more cost-effective than the existing MPS, which is something that we are clearly very excited about.
Thank you very much to Robert and to Billy for joining me today. We've asked them a number of questions, all trying to get under the bonnet of how they do things and why they do things for their clients. I hope we provided you with some insights, and see you again next time.